Crypto world. Well, it's midday in the United States on Wednesday, and I'm calling it PPI Wednesday. The stock market's up with the S&P making a new all-time high. The Nasdaq's all up with a new all-time high, all because the PPI was lower than was expected, suggesting less inflation. And you know what that did to interest rates? They dropped. And when we have interest rates drop, boom, the dollar drops. Now, let's jump over to crypto. And when we jump over to crypto, unsurprisingly, we are green across the board, and look at the magnitude. Bitcoin's trading 114,000, up 2%. Ethereum's up 3%. XRP's up 2%. And then look at the large moves on the week. Now, this underlines how important the PPI is. But tomorrow, we have the CPI, which is arguably even more important. Now, what I'm going to do is step aside so you can see the projections of what the market believes the CPI will be tomorrow. And today proved how important inflation data is. So if the CPI is lower than expected, i.e. raises less than was expected, we're going to have the same response we had today in the markets. The equity market's going to make a new high, the bond market's going to get lower yields, and of course the dollar's going to go down, and crypto's going to continue on this upward march. Now, there's a couple of things about crypto we have to say. Now let's jump over to the derivative market, the Deribit derivative market, which is arguably one of the most important derivative markets. And for every expiration in the balance of the month of September, the maximum paying price is never lower than 110,000 and never higher than 113,000. That's a significant fact. Why? We have Bitcoin trading above the maximum paying price of any expiration in September. That suggests that if the CPI number is friendly, i.e. lower than was expected, and the markets do what they did today, the derivative traders are all going to be underwater, and they are the whales and the market makers because they benefit the most from the maximum paying price being where Bitcoin trades on the day of expiration, and they will have no choice but to protect themselves. And how do they do that? One of the major ways is to come out and buy Bitcoin. So if we get a lower than expected CPI, it is very possible we're going to have even a larger move up than we did today with a very favorable PPI. Now, interestingly, JP Morgan is saying, because of this great PPI number and how strong the markets are, that if the CPI tomorrow disappoints, the equity market could have a large pullback. He says 8%. And so he's suggesting hedging before the CPI number comes out. What this does, and I'm not recommending what he says, I'm just pointing out something, this underlines how important the CPI number is, and in effect it became more important because of the favorable PPI, because everything is higher than many of the pundits, if you will, expected. Bottom line, obviously great, and I wouldn't be shocked to see a little back off as people take profits before the CPI, because it's still a gamble. But at the end of the day, the CPI, if it's in line with what happened with the PPI, will only help this market.